welcome to this special show, Markets 360 Degrees. Well, we have a union budget that saw the markets whipsaw about 800 points on the Sensex and almost 400 points on the Nifty as well. At the end of the day, the Sensex and the Nifty have ended lower, and the Nifty actually made fresh intraday 52-week lows and by a whisker avoided a closing low on a 52-week basis. The Bank Nifty was the saving grace of the day. Well, that's the budget, the much-awaited budget that's come and gone without harming the markets too much, but not helping them too much. Hi, Anuj.
Hi, Lata. You know, the Nifty moved in 270-point band, but the Bank Nifty moved in 800-point band. And as you said, the Bank Nifty was a saving grace. But I tell you something, you know, this is the point we made towards market closing as well. The market did make a 52-week low intraday. It recovered some of the lost ground, but that recovery was sold into in late trade. I think that's something that the traders would latch on to. Also, Lata, you know, what are we talking about on budget day? 50% of losses were on account of Infosys. I mean, one stock which gets absolutely, no impact on because of budget. That stock provided 50% of your market fall is telling you something. Also, you know, keep an eye on what happened to cash market volume. That surged to 25,000 crore. And look at the way FII favorite names fell in today's trade, Lata, led by Maruti. That was down about 5%, new 52-week low for that one. ONGC was down 11%, nearly a 52-week low. And broader market, you know, stocks like Arvind, Titan, the way some of these stocks were collapsing, it's telling you one thing loud and clear: this is a bear market which won't go away with just one budget, because this is a global bear. And in fact, while we were trading, Asian markets were already down 1 to 2%, Europe was down almost 2%, and that's clearly going to be the central theme tomorrow onwards. You're not going to talk about budget. Tomorrow, maybe the day after, you normally see some impact. But Wednesday onwards, budget would be history. You'll talk about global cues and you'll talk about FII outflows, which still looks like quite large in this market.
Well, I think you're being kind by saying that it's a 48-hour budget. I would think it's a little less than that. Maybe an hour tomorrow to get adjusted to the fine print that we may have missed out because the website wouldn't open and was not refreshed in time. But otherwise, this cannot change the hard reality of the global markets, which is that the global economy is slowing down, if not contracting in large parts, and secondly, that risk is off the table for the moment, and we cannot be outliers for both these global trends. We are sufficiently globalized, both economically and definitely market-wise. That's the reality we have to contend with. So fresh 52-week lows certainly cannot be avoided, is what the risk markets are telling us now. But we have someone who is much better placed to analyze both the fine print of the markets and the bold print that's coming across the seas from global markets. Raamdeo Agrawal, the Joint Managing Director, Motilal Oswal, is with us, and of course our two chart experts will also be joining us in a minute. Medha Samant of Fidelity Worldwide will also be joining us in just a minute. Let me start with you, Raamdeo, first. Budgets come and gone, everything analyzed. You think it can't change the reality of the bear grip on the markets or the slowdown in the economy?
Yes, I mean, what you said is right. I mean, there's a maybe 48 hours budget or 24 hours budget, but I think this huge event is behind us. That itself is a big relief. And some of the draconian rumors which are around that long-term capital gains tax will be, I mean, there were all kinds of rumor about long-term capital gains tax, the rumor about the service tax. I mean, nothing came, and actually the fiscal prudence or discipline is absolutely on the dot. So those things were pretty good, and the only thing I found big negative was the triple tax on dividend. Yeah. And since we are coming from the market, probably it is more intense for us than anybody else. The intent was right. They wanted to tax the super rich and splurge on the rural economy. So to that extent it's fine. But doing it triple taxation on dividend, 33% at a corporate level, 20.5% at a DDT level, and then further 11.5% now at individual level if you are getting more than 10 lakhs. I think this is not good, and this is not good for the minority shareholders, let me tell you. Because what will happen is that the management, I mean, who pays more than ₹1 crore dividend? All the managements. Why will they increase the dividend?
Yes.
And yeah, the promoters will not increase the dividend. And if they don't increase the dividend, I think minorities will not get only.
But mutual funds won't be impacted, right?
Yeah, mutual fund won't be impacted if they get the dividend.
Okay.
Okay, that point is taken, Raamdeo. But let's talk about the
Yeah.
positives because clearly there's room for RBI to act now, and our sources believe that it could be as early as 24 to 36 hours now, with the governors, with the FM sticking to the fiscal path. Do you think this time the rate change or rate cut could be a game changer, or like last time, it actually marked the market's peak? Is that still a risk for our market?
It's not the risk, but it's an opportunity in the sense that now the rate cut is not only coming for fiscal prudence, but also recapitalize the banks. I mean, this will be one of the major sources of capital for the public sector banks, which are looking for capital from all possible sources. So clearly there is a game plan with RBI and government. After giving 25,000 crores, RBI has to put up rest of it either from their own balance sheet or by reducing the rates and increasing the bond prices and profits on that. So clearly we are going to see some more action from the monetary front coming from the RBI.
Yeah, nice tug of war, I must say. But Raamdeo, will that make you buy any stocks that are dependent on cheaper money, say lower EMI kind of stocks, NBFC stocks, anything that makes you incrementally positive on any stock?
No, nothing. There is none. I mean, whatever we're thinking, like say housing finance, finance companies are doing well. Already there was enough tailwind, and now I think further impetus has been given in terms of low cost housing being given all sorts of benefit, 50,000 rupees per SSCs further benefit on buying up to 50 lakhs house. So all these things will help the housing finance companies, which in any case were doing very well. So I would stay on or maybe increase the allocation in the housing finance company. But apart from that, I don't see anywhere particularly any reason for us to reallocate any of the stocks.
Okay, Raamdeo, what do you make of this additional duty on vehicles or cars? Because one of your largest holdings is Maruti, and we saw quite a bit of damage in stocks today in the auto space.
Yes. Yeah, so clearly it's a dampener in the sense that 1 to 4%, but Maruti hopefully will be closer to 1.5% rather than 4% because their mix is more on this side. So, but it's for everybody. It's not for a company. It's for the entire sector. So clearly, the kind of raw material benefits they had and cost reductions they had. So this will go as a kind of a cost increase for them, and they'll pass it on if they can pass it on to the marketplace. So I don't see particularly for Maruti or anybody, it's a big dampener. If demand, does it hurt at 1.5% increase in the price, does it hurt the demand altogether? I don't think it's that big a negative. It's not a positive, but not a big negative.
Okay, Raamdeo, final question then. Even as we speak, today the biggest decline came because of Infosys, not because of budget. So the global cues are still hurting right now.
Yes.
Do you expect this kind of pain to continue because of the global cues and budget just being a sideshow?
Yeah, clearly budget is a sideshow. I mean, as you said, day after tomorrow nobody bothers about the budget. But I believe in the month of January, it was one of the largest redemptions all over the world in terms of equity mutual funds outflow. Could there be a very immediate reversal of that trend? I don't think so. I mean, it takes time for this kind of trend to reverse. So clearly we are into slowdown in the global economy and more particularly slowdown from the FI side. So in fact, this triple tax in dividend is particularly most inopportune because this is a time when we needed boost to the Indian investing into the capital market, and we have got a clearly dampener out here. So the FI selling is on. So I don't see any reason for anybody to be overly bullish because of this budget.
All right, we'll leave it at that. It's clearly the stock markets are reflecting your mood as well. Raamdeo Agrawal, thank you very much for joining us. Our chart readers, Sudarshan and Ashwini, have through the day told us that